How to spot an incredible business. See, when I'm investing in the stock market, my goal is to identify an incredible business because I know that if I am investing in an incredible business, I'm going to get incredible returns. So, how do I do that? Two things that I have identified about a business which tell me whether I am dealing with an incredible business or an average business. And I want to discuss these two things with you today in this video. Number one, we have to understand the cash conversion cycle of a business. Now, what is the cash conversion cycle? Let's say I am a manufacturing business and I need raw material to create my finished goods. So let's say on day zero, I order raw material from my supplier. That supplier supplies me the raw material and is okay to accept payment from me after 90 days. So I have to pay him after 90 days. The supplier is willing to give me the goods on these terms. So I have got the raw material now and I can pay him after 90 days. Once I get the raw material, let's say it takes me around 30 days to process that raw material and create the finished goods. It takes me another 15 days to sell those finished goods in the market. And then it takes me another 15 days to collect my receivables. The customers pay me after 15 days when they collect the finished product. So my inventory period is 30 days and my collection period, the cash collection period after I have sold the items, is another 30 days. So I am getting my money back in 60 days. However, I have to pay to my supplier in 90 days. So 30 days before I have to make a payment, I have already got back the money. Now this money, I can keep it in a bank and earn interest on it, right? So this is called as the cash conversion cycle. Every business goes through this kind of a cash conversion cycle. Now this is called as negative cash conversion cycle. So inventory days plus receivable days minus the payable days when I have to pay back. This is minus 30 days for this particular company that I discussed. This is called as negative cash conversion cycle. And I am looking for these kinds of businesses where the cash conversion cycle is negative, or in short, I am getting my payment from my customer before I have to pay to the supplier. Now you might ask, why would the supplier accept the 90-day credit period? It is because I have established such a brand in my business that my supplier shows trust in me and he knows that I am going to make the payment after 90 days. Even if it is 90 days, he is okay to wait for that many days because he is almost sure that I will make the payment because my products have a very good brand equity with my customers. So I am going to get my money. So the supplier, instead of supplying his raw material to some other company which doesn't have much brand value, he is choosing to stick with me and he's okay to receive the payment after 90 days because he has that assurance that he will get the payment for the raw material that he has delivered. So it's brand value and it's the bargaining power that I have with my supplier. That is what creates the negative cash conversion cycle. Dr. Lal Path Labs in India, one such business. I think Nestle also has a negative cash conversion cycle. Colgate, I haven't checked, but probably Colgate also has a negative cash conversion cycle. I don't remember which company I was analyzing recently. But look at companies which have a negative cash conversion cycle. These are the companies which have a good bargaining power with their suppliers. Number two, I look at the inventory turnover ratio. So for example, if my revenue is 1000 crore and my inventory is 100 crore, which means 1000 divided by 100 is 10. So 10 times my entire inventory is turning over. So if you look at companies like VST Industries, which is a cigarette manufacturing company, their inventory turnover ratio is roughly 4. So their entire inventory turns over only 4 times in a year. But if you look at companies like Dr. Lal Path Labs, their inventory turnover is more than 15, 15. So the faster your inventory turns over, the more profit that you are likely to make. The faster you are converting your invested capital into profit. So I want to look at a business where the inventory is turning over fast. My capital is not getting stuck in my business. So in the case of VST Industries, if we see for an entire quarter, since my inventory is turning over after 4 times in a year, I have to wait for an entire quarter for the cash conversion cycle to complete. One cash conversion cycle is like one turnover. It's like one cycle happening in the business. And I want this cycle to happen over and over again in a given year. The more times it happens, the better it is. My capital is not getting stuck in the business. So these are the two things that I look for if I want to spot an incredible business. Number one is the cash conversion cycle. It must be negative. And number two is the inventory turnover ratio. The higher the inventory turnover ratio, the better it is. Thank you so much.